Hi guys, welcome to Crypto MC. This is a daily trade for the living trade for a living, not for the living, trade for a living podcast. My name is Rudo, and I'm a full-time quit your day job and stay-at-home trader. And this is my journey, sharing with you the setups I do on the daily. So in the Discord, the last little setup I did was we were looking at going short, and that was off a buy zone that I indirectly shared with everybody. I don't know where everywhere I posted it. But the bigger prognosis was that I was still thinking that Bitcoin could potentially go to 65K. And that is where I was wrong. So let's quickly have a look at that and then see what we're going to do next. Now, why I had that crazy idea was off the basis that there was two potentials for what this wave count could be, meaning that this could be an ending diagonal, meaning that we're probably going to correct a little bit further down and see this 5 wave with multiple structure retrace, meaning I want to see something that goes down, goes up again, and then comes back down again. Something a little bit more complex. And off that play, the idea was that because we have our 4 go below 1 and these kind of overlapping waves, it just felt more plausible to me that that's the case. Now, we did test the 65K. Now, 65K is a significant target for Bitcoin, as Bitcoin has been revolving around that price point now for, well, almost, 3/4 of a year. So there's a lot that we need to consider when we talk 65. And the idea was with the last trade that I was taking with you guys is that I was going to try and hit the short right there as the trend was still intact from a bearish point of view and see if price pushes back down. And then we had the Trump pump that came out or not out of nowhere. I mean, TA is TA. I mean, I had bullish thoughts there when we were sitting right there. I just didn't act on it. And subsequently, I have this entire pump that I've made very little money on from a trading point of view. My spot BTCs and those things I'm smiling on, but everything else I'm currently crying in my heart a little, oh, come on, man, I missed out on this. So how are you guys doing? Garth, I hope you have an amazing day as well. Hello, Stanku. Dean, happy to see you guys here, and anybody else joining in live, drop me a comment, say hi. And if you're new to the channel, let me know. I'd love to say hi to you as well. And share the content with somebody you think that will take or have benefit watching this. Sometimes you're wrong. Well, that's the thing. Being, as I always say, it's not about being right. It's about whether you make money. I don't care whether I'm right. I saw the bullish thing. I just didn't act on it. So it's one of those things. If I had extra money, and I wouldn't care whether I was thinking it was going to go down to 65K. But okay, let's unpack this real quick and see what's our next direction. Because the argument that I'm saying to you guys is my next Bitcoin trade I'm going to share with you, but it's a risky one. So, I'm going to leave it up to you. Remember, no financial advice. Let's just try and get this in. So in order to do so, I'm going to go back to the daily time frame. And I'm just going to move this back because the argument is that we're going to potentially now not have this overlapping structure. Now, I can say this and tomorrow we sell off and then it does play out. So yeah, be careful. But looking at this, what do we have? We've got a really big engulfing candle on the daily time frame. And typically the way and the rule we go with this is 50% of the candle that makes the higher high, that's the buy. So there's potential for Bitcoin to retrace all the way back down to at least 72 even, and then only go. So between 73, 72, those two yellow lines, I think is a highly probable area, because if I scale this to a 4-hour time frame, you can see that the 50% of the candle that made the higher high, it's already been tested there. So I'm expecting not necessarily a sweep of this low, because then it will, kind of discourage people. I'm expecting a test of the demand zone, meaning the 73.3 is my next big target. So realistically, if you want to look for long, that would be a really good area for your long, meaning that you're looking for price to go into this swing buy zone around this range, considering that it can go at least below that area, which means that this is your next playground. You want to wait for price to kind of do its thing and get itself into this area. Once it's in this area, you want to try and go long, and that's it. Now, here's the danger part, the part where I say, well, full disclosure, where we're at with this. You're going long at highs. Now, statistically, it feels wrong because it's just had a big pump. It has to retrace. Doesn't feel like right. But what we know that from statistical, our human brains are not really adaptive of being able to deal with information statistically. Because there was a high, statistically, it would have been a horrible time to go long. If you ask, just human sentiment, we just pumped. Let's wait for price to go back to support. Pump, wait for price to go back to support. When we have breakouts, that's what I'm betting at. You don't have price coming back to support. There's the danger. So if you're sitting on your hands and saying, okay, well, I'm waiting for price to get back to support, don't. Because the market has shown you, typically breakouts does not go back to support. When we're in consolidations and lateral ranges, yes, the market has time to go test support areas and kind of figure itself out. But this whole pattern, and let's just move that even further out of the picture real quick. I'm just going to do this. This whole pattern has already figured itself out. We're now sitting in that zone where we're trying to turn this supply zone that we had into a demand. That's what we're trying to do. And that means that confluence speaking, if you're looking for many reasons to go long there, if we want to believe that Bitcoin is going to go to 80, 90, 110, 200, wherever it wants to go, if we want to believe that, we need to buy the demand. Simple as that. Now, I've done this many times with you guys when we look at the altcoins, and I'm going to bring up an Ethereum just as the quickest one I can get you as an example. Where's one that's got all its fib levels on? No, that one doesn't have it. But let's use Cardano for an argument's sake. Okay, so we are retracing, and the market was extremely bullish. We're not talking March this year when everything was really bullish and everybody had real bullish sentiments. Bull market's here. It's early, but it's here. I basically use the structure to tell you guys that consider getting out of this area, because if we don't go below 86, the market's due for a retrace because of larger time frame, weekly bearish divergence, meaning the RSI is going lower. It's already telling you the volume is not supporting the price gain, okay? And we have price going higher. It's telling you the greed is not being substantiated with enough buying behind us, okay? And also with that, I also explained to you guys that there's a critical support level that price then needs to hold, your thou shall not cross line, If it goes below that line, that pivot support, you're in for, a retrace. The trend is technically over as such, okay? And now if I take this information, we go back to BTC and we look at this on the daily time frame, okay? We've made a higher high. The RSI has not made a higher high, okay? First little point of divergence. 4-hour time frame. If I do that exact same thing, you can still see that from where we had a top originally and where we had our bottom originally, same thing there. We've got a divergence. So very simple. That 50% line there, 72.55, is also where I need to draw my line in the sand and say, okay, go below that. Only then can I dream lower targets again. So remain bullish from where we are to there. This is your bullish playground. And statistically, you're expecting that it's going to keep on running because you want to buy highs, because the chances that you're wrong is far less than trying to look for a low or look for the ultimate high. And that's basically that, and that's it. So no one will always ever be right. That's the thing, Uncle Morne. I always say, I'm right 65% of the time. I give myself a little bit more credit. Sometimes I go into a run and I go 80, 90, 95, and it feels like I can't do anything wrong. But statistically, when I go through a losing streak, I average down quickly back to that level. And that's the key thing. Now, from an analyst point of view, again, trying not to be too biased, this was the area that, we expected BTC, if it was going to go lower into our destination map, okay, retrace could be. But now we've got that same gap again. So from a 4-hour point and figure chart point of view, we've got that same area as demand, 72.5. It's popping up everywhere. Okay, so 72.7, 72.5. Remember, give or take a few dollars depending on which exchange you're using. There will be some discrepancies. There's bearish divergence, but we've got that bullish pivot there. So there's this whole area where you need to consider going long as opposed to going short. Keep it simple and hope that the trend remains strong. And then forget about all these fib lines again and Elliott wave lines and so forth, because then, we're in a breakout. Things doesn't make sense in a breakout. It just goes and runs, okay? And it's probably going to be fueled by people trying to make sense of all this divergence, okay? People trying to say, well, let's go bearish, let's short this, okay? And having their stops buy the market up for you, meaning there's the high, there's the low. That's a beautiful sell zone hit. But because we're not falling below these areas, if we go back there, everybody that engineered the stop, that was part in that creation of that top, that sold into the demand that was there, okay, they're going to have to do what? Vacate their position, meaning buy back, buy the highs, and that keeps on pushing price up. Okay, so there you have it. That's everything that I wanted to share with you guys for today. Comment wise, I don't think there's anything else, guys. You're more than welcome to join me in my Prime XBT trade group if you want to. All you need to do is open your Prime account using my partner link. Okay, head over to the Discord, simple as that, into the navigation channel. Deposit some meaningful trading funds. I'm not going to keep you guys to what is written in there, but put some meaningful trading funds in there and then ask for the free trial. It's as simple as that. Claim your access. Okay, I'll ask you a few questions regarding your trading user account ID just to check whether you're there. And if you're there, you can join in and get a free trial to this. Alternatively, you can go to any of the channels and use the upgrade link to subscribe to where I trade. Now, full disclosure, guys, I've been a sucky trader the last week. So in the group, I gave, this is my buy zone. So now load, come on. Okay, that is my buy zone, but I didn't take the buy. I had that as a buy zone, but I got stopped out for a few stupid cents. There I had a sell zone that failed, and obviously there I had a sell zone that failed. Let me just do so. So I have been a sucky trader, and it is evident in the fact of my trades. You can see that all the profit I had was currently wiped out with a lot of. So I'm basically giving back all the last week's nice, easy 2 weeks ago, all the nice trades there. I basically gave back all that profit. So it happens. You have to keep at it. But every now and then you get that one trade that just makes everything right and some. Okay. 60%, no, 65 is currently when I bottomed down, but thanks for the vote of confidence there. And remember the one thing, as I always say when we look at this, a sample size is a key thing when you look at your statistics on trading, meaning you say, well, if I take 20 trades and each one of these lines now represent a trade, some of them will be successful, some of them will fail. And the idea is that, over the whole 20 block, you're going to have a 65% accuracy. But it means that you can be wrong 10 times in a row and be right the other 10, and then you've got a 55%. There's no rule that says it has to be knit one, skip one, knit one, skip one. This will always be almost random. And this brings us to the last part. And I actually found this wording for this somewhere watching an Instagram video. But basically the guy was saying statistics is the key. And we've had it wrong all the way along. You don't look at 20 or 25 trades. You need to look at 2,000, 3,000 trades. Why? Because your order size needs to be big enough to take luck out of the equation. And that's sometimes something I suffer with, when I go through and I'm 6, 7 trades in a row winning, okay, they're all just printing money. I do get lucky. you do get lucky. And then when I go through what I call a bad run, which is what I'm doing now, I tend to I'm on a losing streak. No, the luck is against me. So the only way you will ever get past that is have a big enough sample size so that it averages out. It's hard because mentally we've got absolutely nothing. It's easy to say the words. It's easy to listen to the stream and say, yeah, it makes sense. But doing it in real life is much harder than we all give ourselves credit for. So if you're a trader and you've been doing this now for long, kudos to you, buddy, because you've got what it takes. And sometimes it just means that you need to have enough time in the market to get through the good luck and the bad luck so that you get to that consistency. And that's it. That's everything that I wanted to share with you guys. Thanks so much. This afternoon, we're going to be looking at the HODL coins. Now, just as a quick one, you think you're in the pump, you think you're leaving. The dominance is still not quite where I want it to be. Your alts all had seen a little bit of a double-digit gain yesterday of some of them. Dogecoin, one of the ones that I highlighted out, had a really good run, but now selling back off. And I'm moving my attention now over to Shiba Inu, thinking that it's going to be the next one to try and get there, and so forth. So we're going to be looking at those ones, and then also we're going to be looking at some of the other smaller coins and to see whether there's something there, whether we can still plant seeds, and whether we need to start worrying. If Bitcoin falls below the pivot during the run of the day, things like that could happen. Stock market wise, guys, I mean, that's the thing. If I'm looking at the Dow Jones US 30 after yesterday's Trump pump, 2 days of Trump pump here, you can see there's been very little retraces. That's what I mean. That's how Bitcoin should move, continue on moving, on the daily. This is a 15-minute time frame. But at some stage, exhaustion will kick in, and it's just a matter of when will we fall below these supports rather than if. And that's something we need to be prepared for. So this all can still turn around and bite us hard in the arse. So don't be too, what's the word, too comfortable that there's going to be a bull market, or too brave, because the Dixie is trending up. It means everybody likes the dollar. People like the dollar, you don't know, so it's a simple thing. And Bitcoin starts losing a critical support level, you might find that the confidence is going to run back to the dollar, and we need the Dixie trending down. Okay, that's bull market. This doesn't scream bull market. Okay, so that and a lot more in this afternoon stream. So have a lovely day, guys, and chat to you a little bit later. Cheers. I'll keep hustling.
Subscribe now.